Welcome to the Trading Lounge and the Day Ahead Report, and here we're actually looking at the US dollar index here, and the reason for this is that, and we'll get into this in more detail when we look at the currencies, but it's really one of the driving factors behind the market moves at the moment. And as this has been moving to the upside here, then obviously the SPY and the S&P 500 and the Dow and Australian dollar and so forth have all been pretty much doing the the opposite and correcting in their own way. But I feel that this is maturing now because we were looking for a retest at the 80 here. And the corrective pattern we're looking at is a little bit complicated, but basically an A and a B and a C wave. So what we're looking for in a C wave has always got 5 waves in it. So we were looking for the 5 waves in terms of up for 1 here, back for 2 here, and then the third wave here can be the 1, 2, 3, 4, and the 5 to here. So it could be completed to there. This could be the 5th wave in through here as well to complete it. Or we're going to be seeing one more little push to the upside here before we see it fail. So it would be about the same length as the wave 1 here. So we can expect something like that. But once that's complete there, then we should see a move to the down, see it start staging to the downside. Now, once it starts moving to the downside, then either from this top here, or this top here, once this occurs through here, then we'll see the indices push to the upside further. So that's what we're kind of looking at here. So when we look at the Dow Jones here, we were saying that while it's above the 13,500 here, it's supported, and we have to stay on the positive side of that. And it's always sort of been the case there because there hasn't really been a breakdown in price in terms of any of the indices or the commodities as such. Yes, they're all correcting in their own ways, and wave 4s are complicated, and that's a bit frustrating, but that's just the way it is. But these larger corrections can be the foundation for engineering the next trend to the upside. So we're still waiting for that. We don't have a 5-wave structure to the upside yet in these markets here, and we could expect the bounce off the 13.5 here, the old support, of course, and then the bounce comes back up to meet the supply area of the previous high, which it's doing. So it's it's reacting here. But if it ever finds support on the 13,600, then we'll see a push to the upside. This is also the same for the S&P 500 as well. I wonder if I've just got a larger chart here. Yep. So with the S&P 500, there is a bearish connotation in that the resistance is the group 2 here, the 65.72 and the 80 here, and the price couldn't get above that. And it's important because the S&P 500 is a more broader market than the Dow Jones. So what we're sort of expecting here is expecting another little push down to into the 1450 here before we see any more upside here. So if that US dollar does make another push to the upside, then we are likely to see a break of the 1450 here. But once that's completed, then we should see a push to the upside after that. So that's kind of what we're looking at. So, we're in the mature stages of the correction, completing itself. Yes, it can be complete from this point here, but we just need to be mindful that there can be one more push and then to the upside. So that's kind of what we're dealing with. It has, this kind of price action has made the robo trading on the local market a bit frustrating, but that's just the way it is. When we have a look at the European markets, we're looking, say for the DAX here, we're looking for the DAX to be pushing higher through here. So after this correction here, we're looking at this 5-wave structure up through here to be wave 1 and wave 2 to come back. Wave 2 may not be completed. We may have an A and a B and a C here for wave 2, but then we'll be looking for higher ground above, well, pretty much up into this area up through here actually. So a more continued sort of move to the upside through there. The FTSE is a little bit more complicated in its pattern through here. It's just always been a bit complicated. It's all got bunched up through here, and now it's doing so. It's got, even though these are new highs here, they're starting to create overlapping wave structures. So, but anyway, as long as the 5.8 really stays, or the 5.7 7.2 stays in play here, then we have to stay with the upside of the market, because it hasn't broken down. This move down through here has got overlapping wave structures, so it's more of a corrective pattern to the downside. So looking for a break to the upside. Like I said, the US dollar is maturing in its correction, so all of these are maturing as well. And it's important to note that too, because with corrections is that, we're always looking for, a small pullback in a market to go in and buy and so forth and stuff. But when the correction just goes on and on and on and on, we tend to lose interest in it. And that's a point to be noted, because once we do lose interest in it, people forget about it, then it breaks out and moves off. So, you need to sort of change your thinking, become more diligent the longer the correction becomes. The Australian market as well, it's pushed down as well yesterday, based on sort of China figures and so forth. But the Chinese market actually pushed up yesterday. Our market has been correcting and even moving down through here. Yesterday was on lower volume, so there's no real sellers in that move down. So it's just a bit of a shakeout. So just be aware of that. There's good support at 43.72 within this market now. But yes, it could come down further. But once again, once that US dollar starts, completes its correction and starts to move to the downside, then obviously the commodities will push to the upside. And of course, we will be following that path as well. So it's a bit of a shakeout. The safer trade, of course, will be on the 4.4 here when it comes. Alrighty, well, let's have a look at commodities. They were a bit weaker last night. Okay, the copper market here, quite central to base metals, is still in its wave 4 correction as well, and has got 372 as areas as support there. It can certainly move down lower, where I've got the wave 4 placed there is roughly the 38.2 retracement level of the wave 3 here, and also wave 4s can get bit complicated as well, so it's still sort of early days. And as I mentioned before as well, because we're in wave 4s and 5s here, of 3 and then a 4 and a 5, it's going to take some, it's going to be spending a fair bit of time here, but the main thing is that the price does sort of stabilize in this area through here, even though it is corrective, and that will just keep things reasonably sort of steady within that. And as you know, the base metals have basically been sort of following the gold as such. The gold took off, and then the base metals basically sort of followed it, and gold's a little bit unsure of itself at the moment as well. So when we look at gold through here, we know that it's had this this strong trend up through here. We know that there's resistance at the 1772 and the 18, and once again, as mentioned before as well, that it's had its trend up through here. So it's going to be, it will continue to go higher, but it's like an edging sort of process as it does that. So as these were a series of 1s and 2s here, these are going to be series of 4s and 5s through here. So it's not like they're going, it's got a lot to it's not going to be any extreme moves to the upside. So as you can see, it's really dealing with these numbers here, and it's still got got a fair way to go through there. On a bit of a subtle note there, it has dropped out of the the subgroup 2, which makes it a bit weaker there. We'll see how this retest goes here. If this retest doesn't fail through here and moves back up, then that's the 1765, 72 on the 80, then it's back in there again. So that will be interesting at that point there. But because we got 5 waves down from the high here, that means that we'll be looking at an A and a B and a C correction coming back up here, retesting the supply level up here, and then having another move to the downside through here. So we should at least get an A and a B and a C wave down through here. So just be mindful of that. Yeah, and the oil market as well is as we've talked about before. We were looking for it having its 4th wave coming up through here, and that's all fine. And now we've got a little 5-wave structure to the downside here in the 1, the 2, the 3, the 4, and the 5 through here. So it will be interesting to see if this is actually wave 5 here, or this is just wave 1 of 5 in terms of down for 1, back for 2, down for 3, 4, and 5. So coming further down, which is more likely in looking because of looking if taking this as a wave 1 through from this high down to here as wave 1, then we would expect wave 5 to be the same. But we have to also be mindful of the 90 here as support. So let's just see if the 93 gets support here, then we can go long on that up to the 95. If it fails within here somewhere, then we can look for this to be moving further to the downside. Okay, let's have a look at currencies and the US dollar. That's the most important news, I feel. Okay, starting with the US dollar again, as I mentioned, I think this is the most important development as such. The wave 4 that we're looking through for here, the 38.2 retracement level is at the 80. So anywhere near that is good. We can obviously see that the supply starts before the 80 in this case. So having that top there as the wave C of 4 is fine, and new lows would be made under here. So and as mentioned, of course, so if that does move down from there, then we'll see those indices and currencies and commodities push to the upside. So let's just sort of drill in here a little bit further through here. And as I mentioned a little bit earlier, that that the ABC correction that we've been sort of tracking through here, the A, the B, and the C for the B wave, and the C wave up through here, looking for the C wave in 5 waves. So, look, I do think this is a bit of a pullback here for wave 4 here. And if that's the case, it can pull back to the wave 4 of 1 lesser degree, which is in here, or the 38.2 retracement level from that point to that point there. So it's all in this sort of ballpark sort of area through here. So what we could say to sort of understand if that is the top there, or we've got one more push to go through there, we could say that, well, the midpoint here is the most important number between the 79 and the 80 here. So we could say that if the 79.50, the midpoint, failed as support and became the retested resistance here, then we could say with a reasonable amount of confidence that that top would be in place there, that 5 would actually be on there. And also this move down through here would help create overlapping wave structures above wave 1 here as well. So that would break one of the Elliott rules, but not that's probably the least most important rule when you're working with leverage products as well. So, but as I mentioned with the wave count before, we would be looking at, obviously this is wave 1, wave 2 here, and looking for wave 3 up here. But in wave 3, the 5 waves in wave 3 are the 1, the 2, the 3, the ABC for the 4th, and then up for the 5th. So that could be it there, and this could be the 4th and the 5th up through here, but it's a little bit small in relationship to the wave 1 here. But that's what you sort of get around certain numbers. So it will be interesting to see how it pans out here, but it's certainly something to watch through here because it would be one of the key elements for the turn in the market. So just a little bit more time for that to base off there. And of course there will be a bounce off there as well, so a bounce off here, then retesting supply back up through here, then failing through. So it will be a game of support and resistance of supply and demand through these two numbers here, which you should be able to work out in due course if you're patient and just observing it. So with that in mind, this correction up through here would be the opposite for the euro coming to the downside. So on the daily chart here, we'd be looking at this wave 4 coming down through here. Is this complete? Is it just its first swing? These are the questions that we need to answer ourselves. But our main point at this stage is looking for the current low within here. And if we look here, we can see that that this is pretty much the mirror sort of opposite. I've got it counted slightly different to the downside, not that it matters too much. But once again, one of the things here is that this is an overshoot pattern here. So with the overshoot patterns, we normally get the equal distance above is normally the equal distance below. So there is room for it to come down based on that. And, it has rejected the 130. The next level of demand, it would be down here at the 128 here. There'll be a certain amount in this area through here, so it'll be interesting to see how that sort of unfolds there. But drilling down from the 4-hour into this area here, if this is just a 10-minute chart here, if this is the low here for the wave 4 here, then the first thing that, well, obviously we've got support on the 129, but the next step would be getting support on top of the group 1 here, the 10, 20 and 30. So finding support on subgroup 1 would be the next step, and then following the midpoint here. If support is found on the midpoint, then you can work up from there. So we need to work out if we're getting a 5-wave structure to the upside or just an ABC. So we'd have up for 1 here, back for 2 here, and then this would be up for 1 and back for 2, and then this would be the whole little third wave unfolding through here. So it can be counted as corrective to the upside at this stage, and it can also be counted as an unfinished impulse wave. So this is where the support and the resistance becomes paramount in here. And this would be the same for the Australian dollar as well. And with the Australian dollar as well, I must stress the most important aspect of all of this here. The Elliott's fine for getting direction, but when it comes to actually trading, then support and resistance makes it a much safer platform to work with. And finding or having support on 105, gives you that confidence that that you're working from the closest, largest number, because at the moment, the 105 is really the retested resistance, isn't it? So it's checking lower down through here and so forth. So we've got this count as it stands at the moment. This count is a little bit iffy. So it's just safer to wait for the 105 to become the support at this stage, and then we need to know that turn in the US dollar is going to occur. It's not the end and be end of all, but it is the catalyst behind the commodity prices. There'll be a little bit of support for the from the Shanghai market at the 2000. But as you know on the news that the changeover of leadership, the transition in leadership for China will happen in October, and of course coming into that transition, the old leader's not obviously going to have any grand plans in the last finale, so to speak. So it's not going to be until sort of later in the year, in the new year, that we'd see China actually lay out some new plans in whatever direction that may be. And if that is in development rather than internal work, then we would see commodity prices lift at that stage. But and obviously the Australian dollar becoming recipient of that advantage. But yes, look, just drilling down into this structure here a little bit more through here. It's the same as I just mentioned on the euro there. So any long trade now would have to be based on top of the 104.30, have to be on support here. You need to be careful too. The price can push up through here, but it's the retest. So the breakout's important, but the retest is more important. So that's what you'd be looking for there. You're looking for some sort of impulse wave to the upside there. Failing to find support on the 104 would obviously create new lows through here. But normally, just coming back to the 105 here as well, to me, this is just the first swing low here. There can certainly be, it's quite normal for the market to work across, such a number at the 105 there. So just be aware of that. Alrighty, well, good morning and good luck.